Well, hi everyone, and welcome to the Saturday Stock Market Recap by Buffett and Beyond Research, and this is for October 19, 2024, and what a week it has been. And let's see what's been going on. Well, the market is measured by both the Dow and the S&P are at new all-time highs once again. The industrial ETF led the way this past week, but the tech ETF was right behind the industrials. And our weekly stock analysis video, well, Monolithic Power is indeed a powerhouse. It's up over 500% over the past 5 years and up almost 100% for the past 1 year. Yeah, it does indeed embrace our sector stars portfolio. And our ETF video, this week we show you how to find the best stocks in the best ETFs using our computer program. We found a new stock this week, which will be part of at least one of our 2025 portfolios. And folks, you can learn to use this computer in about 5 minutes. And let's see what the S&P did this week. And folks, last week we went up and we went above this top line, and usually, just about always, when it does that, and when it closes above it, it will pull back and then make another attempt at that high once again, and that's exactly what happened, except on this particular day here, Tuesday, it was a big drop. I mean, it looks small on this chart here, but boy, oh boy, that was a big drop, and it scared everybody. Thought we were going to go down to that 20-day moving average and test it once again, but no, right away, Wednesday, Thursday, came back up. Thursday went above that top line, closed below it, and then Friday closed just about on that line. Down here, our intermediate term indicator is still positive. So, boy, oh boy, this has been a nice market. Now, once again, remember, this whole climb in here, this whole bit in here is not that much of a move, but it seems like every day it was something was setting a new record, or a new high, I should say. But it has not moved that much. But we're having a good year. It's up over 21%, the S&P 500, that is. And when we look at the S&P 500 on the candlesticks, we can see where that previous high was, and we would expect it to come down and test it, and it might just wind up right where that 20-day moving average is, right in here. So that's kind of what we're looking for, almost a drop of 100 S&P points. Wouldn't bother us one bit. And down here, we can see that our intermediate term indicator is still pointing up. So the market is getting ready for an election here in about 3 weeks, and everybody on TV and the radio are talking about which stocks are going to be good. If the taxes are raised on stocks or raised on individuals, or if the other side wins and says, okay, we're going to increase tariffs on product coming into this country. Folks, no matter which way we go here, it's going to cost us money, because if they raise the taxes on, just say, wealthy individuals, well, folks, those are the people who put the money in for innovational type products like AI, the internet, things like that. Yeah, so the investment money slows down when taxes are raised, and when tariffs are raised on imported goods, then the other people on the other side raise tariffs on our goods being exported to them, and everybody loses. So it's going to be more expensive no matter who gets in. And this is what the market is worried about. What they're trying to do is say which stocks are going to do well under which scenario, which stocks will not do good under each scenario. And so we're going to see a lot of churning in this market over the next 3 weeks, folks. So we just might as well get used to it. But meanwhile, the S&P 500 is above the 20-day moving average, 50-day moving average, and the 200-day moving average, and that's a nice place to be. And when we look at the QQQs, these are the people who just have not made new highs. And here's the old highs back here. And boy, we're getting close, aren't we? Just ticking up. But Tuesday we had that big drop in there, and it took out of our tech and semiconductor portfolios, one went down 1.5 points and the other one went up about 2 points. So we kind of broke even in there, except we sold some covered call options on the portfolios and brought in enough money to go to the dentist. Have you gone to the dentist lately, folks? I can't believe these prices anymore. Anyway, that's why we say sell covered options on some of our portfolios to get that money just to pay for those bright $1 million smiles. And for portfolio protection, we went out, we bought the January 17th SPY 500 put. Notice how these puts have been going up because, or if the strike prices have been going up because the market has been going up. And the October 18th expires, actually it expires on a Saturday, which is today, but it stops trading Friday afternoon at 4 o'clock. So this one is gone, and we have our new January 500 put. And if you didn't get it, and you want to have these puts in there, because when we sell cover calls, it gives us enough money to buy these puts, and so we break even on the insurance part anyway. So with the market being strong, if you didn't buy the January 17th SPY 500 put on Friday, you buy it on Monday. It's not going to make a big difference at all. And here we are with the portfolios. How'd they do? Well, the top QQQ portfolio went down about 1.5%. Sector SARS portfolio went up about 2%. Growth portfolio up a tad, up about 1%. Dividend growth and income stayed about the same. S&P 500 went up about 1%. So here we are, folks. We're sitting here doing. Our portfolios are doing very, very well. I mean, look at these two top portfolios. All three portfolios are doing very, very well. And of course, the dividend growth and income portfolio still outperform the S&P 500. And this is a more conservative portfolio when you consider the dividends are higher, and the dividends are a bit more, or stocks with dividends are a bit more stable than those that don't have dividends, until a whole bout of selling comes in, and then they sell everything. So, but it's nice. A lot of people like this dividend growth and income portfolio. I particularly like the top QQQ portfolio, and most of our people are in the sector SARS portfolio. So being up close to 40% is nice, folks. So let's take it while we have it. And just remember, if you want to live on this beach, here's some beach art that somebody did. Is this magnificent or what? And there it was, just on the beach, and the tide hadn't come in yet to wash this away. It only lasted about 6 hours, well, about 12 hours as the tide went out, and then the tide came back in and took it away. But if you want to walk on this beach like Jimmy Buffett once did, and then he had a place only about 6 miles up the road, or up this beach, I should say. You want to walk on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out, enjoy the weekend, enjoy the market. We have an election coming up, so we have a lot to talk about over the next 3 weeks, and the market should drive itself crazy over these next 3 weeks until the election. So go out, get your mind off the market, be with your family, have Sunday dinner with your family, with your loved ones, and, folks, we'll see you right back here in a couple of days.